Okay, we started. Yeah, we're starting. Okay, great. All right, welcome aboard, everyone. Let's have a quick look at the market and make some decisions about what we're going to do this week. Um, Lots going on really with the trade dispute, and that is just adding a little bit of uncertainty to the market. But we can start making an assumption on where we think things are going. Hi guys. Hi guys, good to see you in. Um, okay, so let's have this chart up here. So now the Aussie yen is a decent barometer for many things, and it's an okay place to start really. It's a decent barometer for two reasons. It kind of trades one risk-on currency against a risk-off currency. So the main risk-off currency that is focused on is the yen, with the Swissy a close second. And a risk-on currency, the main one really is the Aussie. The euro is up there, and the Kiwi and the CAD are both up there as well. So if you're trying to find general market sentiment, it's quite a useful tool to look at how the Aussie yen is trading. And we can see here that the Aussie yen is in a downtrend. Hi, Robert. So there is some stability down here kind of going on. So we can see that there's a little bit of a push. Now the trade disputes are making trading anything kind of positive to the upside a lot more difficult. Then you couple that with the fact that the Bank of Japan are now flipping direction in comparison to the other central banks. They are raising interest rates, and the other central banks are reducing interest rates. So for that reason, the yen becomes, I think, one of the most interesting currencies to trade on the long side for at least the next 3 months. Um, Now that doesn't mean that we have a trade necessarily, but we can kind of get out in front and kind of, make some suggestions about where things might go. So if you look at this, this is trading lower. So you can see that there are lower lows, lower highs. There's moments where the market pauses. So we can see a kind of pause here uh, along here. That we can see this market pause along here. So it's kind of trading inside this box range. Then all of a sudden it flips out of the box and it trades a lower low again and a lower high, and it's off to the races to the downside again. This is suggesting that the current run is probably um, potentially, I should say, rather than probably, it's potentially over for now. And that suggests that if we are going to continue to trade this to the downside, which I think we should, if we're trend trading this, then we're just looking for where the lower high is going to be. So that's when we kind of would bring in some trend lines and say, okay, well, where's the current trend? Well, there's a high there, and there's the next lower high. You could use this one, but it's going to be very shallow. So when you look at along there, it's a bit too shallow to look at, and I'm not sure whether you can see that well. So I'm just going to change this to black, make it a bit easier to see. Maybe it doesn't need to be black, but maybe it needs to be thicker. There we go. So you can see that one. There is one there. If you were to kind of use this one and use that angle, that has now been compromised. So we can't use that one, but we can start using these highs along here. Is that any good? Not bad. That's pretty good as well. So there's a longer term position here. So trying to find the trend line is going to be, one of the important challenges. But what I'm looking for is the most amount of pit perfect touches, which is something that Jeff Pine has always kind of drilled into me. Look for the most amount of pit perfect touches. So if you were looking at pit perfect touches without break, by the way, so you're looking at pit perfect touches, but without break. Now, without closes, I should say. So if there's a close above this level, it negates the level, or it certainly kind of like questions the level. So if you were to put your trend line along here, this close makes that level a bit more questionable. It's still a pretty good level in a lot of ways. You've got a decent touch there, some touches here. That close makes it problematic. There's some touches along here, so it's a decent line, but I would prefer to go with a higher line and use this close here because you still get these nice touches here. So it hasn't closed above, so I'd use this one as a trend line. Now, what this suggests is that if price can come back up into this area, then there would be a potential trade short. But price needs to get up there first. Now, if you are counter trend trading this, it's dangerous because it might get up there, but it might take a while. It might come up, sell off, come up, sell off. And what may well happen is that price may meet the trend line rather than trend line meeting the price. So it might just be, sorry, the trend line might meet the price rather than the price meeting the trend line. Price meeting the trend line would look like this. Let's get some bars along here. Actually, just use, yeah, let's use these. So it would look like something like this. So it would kind of start coming up, and price would eventually meet the trend line in a bit of a bull run. Now, for the trend line to meet the price, rather than price kind of continuing to the upside, what it might instead do is stay along a level. It might go up and then down and then up and down and up and down, just remaining sort of along this kind of whole area, and just waiting along this whole area here until the trend line meets price, and then there'll be the trade to the downside. So right now, what we're looking at is the horizontal level here, to potentially trigger some shorts. Or ideally, what would be better is confluence along the trend line, and that would probably mean this horizontal level here. So that would mean if that's up around about the 12th of March, if it's kind of gone around about there to around about the 12th of March, so sometime from Tuesday the 11th, so sometime from next Tuesday, so this week coming in, if this gets a rally, then we can start looking for weakness in this area and continue the trend lower. So we're looking for the yen to remain strong ultimately. Now, the Bank of Canada have got an interest rate decision this week, so I believe. So we'll have a look at that in a minute. But if we're going to compare this to the yen, what we'd want to see is something similar. So again, trying to draw these pick perfect touches on the trend line. There's one there, there's one there. Now, this one would be negated because of the close above. Let me make my chart a bit bigger. There's the close above, so that's no good. So then let's just move it back up again and see what that's like. Now, the reason I don't love this one is there's only 2 touches, so it's not great. Now, can we get it any better than that? That's only 2 touches. If we go with a close, that's better. This one didn't close above. You can see it opened above, then it ended up closing below. So I would probably look at this trend line here. Now, that would mean, again, that we're looking at confluence. That confluence area might be there on around about the 13th. So we're looking at next Friday, possibly. Or it might be just a little bit higher, and we're looking for, well, it depends on if we get a decent bull run to the upside. But this is the areas that I'd be watching. These horizontal levels. So what I'm after to make that trend line look better is confluence with a horizontal level. So I'm looking at a trend line and a horizontal level as well. And I'm focusing on the yen. I'm focusing on the yen for trades because the yen has got fundamentals mostly in its favor. That's kind of pivotal. So let's have a look at the news that could move it next week and see what's going on. Now, obviously, the trade wars make things challenging, as I say. But one thing I would say about the trade wars is that they probably play into the hands of the yen because the market does not like uncertainty, and it's unlikely. Investors and traders are unlikely to um, want to invest in things that have got risk. They're much more likely to kind of like want to keep their powder dry, and the best way to do that is by going for more kind of safer assets, and the yen just kind of like flows into that. So I'm getting distracted because I'm just having a look at the seasonals as well here. Let's see what's suggested this week seasonally. So the month ahead, it looks like the Aussie is something that we could look at seasonally. I don't know if I've got my no, I haven't got seasonals on this one. Have a look at your seasonal charts, but the month ahead looked pretty good at the seasonals for Aussie. The yen actually looks pretty weak. So the Aussie and the Kiwi are the two that are suggested for the month ahead, for strength. Now, that may well be enough because that's a decent looking bar. Let's have a look at the longer term time frames here. Yeah, it's not great on the Aussie. When you look at this on a weekly, there's a horizontal level there. It's not bad. This does suggest that we could get a little bit of relief, a relief rally. It's going to be a dangerous one to trade it against the yen. But really, when you're sort of looking at these, you've got to kind of sum up whether, firstly, where's the risk? Is the risk kind of trading against a stronger currency? But secondly, where's the price? Does the price suggest that there's been enough of a move in one direction to then, give you a little bit of a turn? So Aussie yen to the upside, certainly for the next week or two, could be on, or depending on if it reaches that level, until we get to that trend line horizontal level, then we can maybe assume that it could maybe see a little bit of a lift to the upside. But we're going to have to be very careful trading the Aussie yen. If we're not going to be counter trend trading, which is unadvisable, then maybe something like the Aussie CAD could be something as well. And we'll look at the Kiwi as well. I don't like the Kiwi as an economy right now, but let's have a look at the Aussie CAD. Aussie CAD on the weekly is on a resistance level anyway. Let's have a look at what it looks like on a daily. It looks okay, doesn't it? It's kind of like caught in this range. And this is where these bars start to get a little bit more difficult because this is, they've got the look of a bullish bar, but not in the right place. So that's problematic because really you'd want to see that kind of bullish bar at the bottom of the box. This is the box that we've kind of got right now. There's not much room to the top of the box to go. So you'd really want that kind of down here and pushing higher. So Aussie CAD might not be the best option. Maybe the Aussie pound or something like that. But Aussie Kiwis, definitely another one that we could certainly look at. So let's have a look at the Aussie Kiwi. That's quite high as well. Aussie twist is edging to the downside. So you can see that this is really expressing the risk. Now the Swissy is also not great seasonally. So that does cause a problem. I tell you where we could also look though is the dollar. So if we're sort of like looking at potential trades, really we're trying to sort of fit GN. What's GN? What's GN, Robert? Is Robert gone? Are you guys still hearing me? Oh, sorry. Pound Kiwi. Yeah. Okay, let's have a look. Pound Kiwi. Pound Kiwi's already kind of taken off quite a lot. But the big problem with the UK and the pound, particularly, is inflation. And I don't know if you're looking at that. Yeah, it's an issue. What's going on? What on with the UK is the inflation is remaining sticky, and this is why we're kind of seeing this kind of run with the pounds. So inflation kind of kicked up, and I'll show you this over here. Um, this here. This is what we got with the inflation kind of picture for the UK. It dropped significantly, which is very, very positive. But look at the current situation; it's ticking higher. And if you look at the actual number, 3% is not a number which is in line and climbing. So it's not just that it's 3%. If it was 3% going this way, that'd be okay. But 3% going that way is not so good. So that kind of leaves the pound kind of on the table as a potential one to buy, which would suggest that if you were flipping back to the pound Kiwi, then you'd probably look for a move lower so you could get in on the long side. Now, I don't know if that's what you were suggesting. Maybe it was. Maybe I've misread that, Robert. So if you're looking to go long here, again, let's draw the trend lines in. So you've got a decent one along here. That's quite a nice one there. It didn't close below, it opened below, but it didn't close below. There's a touch there. Now the angles have changed recently to here. And that also looks decent. Look at that. And no touches there. So there's a trend line along here. So dipping in on around about well, that's the 20th of April. That's going to be a long way away. Let's have a look at what this looks like on a daily. There's still some juice here. Do you know this gap, when it sort of starts to take off, would suggest at least kind of some sort of suck back into the area. Now, if we draw a trend line along here, that's pretty clean. You know, you've got touch there, close enough to a touch there. That's nearly a perfect touch there. So that would suggest coming back into the area before going long. Now, again, that counter trend trading this going into next week is dangerous. Sometimes when I look at charts, I kind of look at it and think, actually, will there be the right trade this week? Because if you've missed the first move, if you're in already, Robert, this is one that you would probably want to shave a little bit off and add again when it kind of comes up. I wouldn't take the whole position off by any stretch, but because it might sort of like go another leg or two. But taking a bit off when it's done an explosive move, and you've kind of got this double top sort of scenario going on here as well. And you can look at something like an RSI to check whether there's some sort of divergence, which we can check. What these on Orchid? Where's Orchid? There it is. That bigger 30, that's all right. Parameters on the 14. So this is sort of like looking at the closes. Of the pattern. I can't really see the parameters. Let's change this to white as well, because it's probably going to be easier to see. There we go. So what's this suggesting? You see how this one sort of like when it's above this 50 line, it's really sort of suggesting uptrend. And when it hits this 70% line, it's suggesting overbought. Now we are in that kind of scenario where it's suggesting overbought. And you could go back and check it out. It's I'm not suggesting that you use this as an absolute strategy, but the RSI is a useful tool to kind of seeing where the motivation behind the buying is kind of getting a little bit overcooked. So you can see here we had a big run to the upside. It hit the 70 line, the overbought level, and then it started to fade again. Hit the overbought level, went a little bit further, just came along, and then it kind of came below 50. This suggests downtrend, but actually which is why you got to be very careful with the signal, because the downtrend, yes, there was a downtrend, but it didn't hit oversold before it started to kind of like move back into positive territory. But it is on the higher side, and we've got a double top. So the pound Kiwi suggests at least a bit of a fade. Now, whether that's not likely to turn it into a downtrend by any stretch, but a fade at this point looks probable. So if you're in a long already, this is where you'd say, okay, let's take a little bit off the table and add that position back in after a fade. And that fade could come down here. Will it be filling the gap? Well, this gap here well, I mean, to say something will happen is a dangerous and impossible statement to make. So we would never say anything will happen, but we would say, what are the probabilities? What's the probability that this gets filled down here first? Difficult to know. I mean, why would it get filled? And if we look at this is where we sort of like start look at economic calendars and try and make an assumption on where the fundamentals are. I mean, where's the fundamentals with the Kiwi? They're not particularly good. The Bank of England are struggling to lower interest rates because of the inflation. So why would it fade is the big question. Well, let's have a look to see what we've got coming up this week. Is it this one I want here? Yeah, this is the one we want. All right, this is what we got kind of coming up this week. And what we're looking for specifically is numbers from New Zealand. Offshore holding is not significant enough to move it. We can have a look at what might move the European currencies. You see, this is another reason that the pound is going to struggle to come down at the minute against the Kiwi, because Europe, generally speaking, is just kind of in this inflation. It's in a difficult inflationary environment. Even the Eurozone isn't fading as fast as it would like. And we have seen sort of some decent reductions in price. Now, this is the CPI data from Canada is going to be of interest because 1.9%, they are below 2%, and they've got a faltering economy with a motivated central bank to lower interest rates. So the CAD should continue its weakness. And if you can get a position on the CAD short, that would be in the short list. If you're looking at, where things sit right now, the yen is in the long list, but it doesn't necessarily mean that you've got the right price for that yet. But the yen would be something that I would be looking to go long. The CAD would be something I'd be looking to go short. The pound and the euro, I would be looking to be a little bit wary of, but against the right currencies, I probably would prefer to stick to the long side. The Kiwi is still really a short, but it's getting a bit overblown in price. The Aussie is in the middle as well. But the Swissy and the yen longs, CAD short, and the dollar probably short as well. So they're the sort of four that I'd focus on the most. Now, what else is going on? Current account. Now, this is an important number because current account measures the difference between exports and imports. And if you look at what's been happening, the exports have been more expensive than, higher price than the imports, which really means that people are not buying this currency. So current account is something that you can look at to kind of get the strength of trade, because it's to do with the trade balance, the strength of trade to do with that currency. And that's one thing that can push a currency price. When you see current account high, it suggests that people are, participants across the globe are buying goods and services from that country. And if they're buying goods and services, that means there's demand for the currency because they have to do the exchange before they buy the goods and services. These have been in negative territory for quite some time. Now, if we have a look at this on a year-on-year basis, this really is kind of, correlated pretty well with what's happened to the fate of the Kiwi. Look at it. It's in terrible, terrible shape. So it's down, 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 down. And it's, we had a slight tick up, but this is going to have to, for us to get anywhere near what would be considered, I suppose, a more regular area, it's got to be in this area here. I mean, since from 2014 right the way really through to 2021, we were kind of in the negative 0 or negative 5 billion to negative 10 billion. And now we're in negative 25 billion. So we are really in, the New Zealand economy, when it comes down to trade, is in a hole. So for this currency to start to strengthen, it's got to get out of this trade hole just as one metric to follow. So watch out for this current account. This taking a big jump to the upside certainly would encourage people to be buying the Kiwi. But if it doesn't, the Kiwi remains on the sell list. And even after a big boost, one number doesn't really change the trend. But if you saw a really positive number, then then it might start to suggest something, and it might bring people in to want to buy the Kiwi. Um, Trade balance will be watched from Japan, but that's not really what we're focused on. CPI from the Eurozone, again, difficult position for the Eurozone. Not yet under 2%. And look really what's been happening recently. CPI went from 1.7% back in October 24, and now it's just climbing and climbing and just messing around this number. This kind of suggests that the ECB have probably found near enough the current sweet spot for interest rates. Now, interest rates dropping down to near zero would be probably impossible in this stage. They want to try and get it back to around about 2%, so that they're motivated to drop it. But inflation's picking up now. Inflation for the Eurozone is driven mainly by the cost of energy. So because of the situation that's gone on in the Ukraine and Russia, it pushed up energy prices in the Eurozone. So if you want to get ahead of what the ECB might do next, then watch the energy market, because if the energy prices fall, then you would, and you can see oil falling. So oil falling, that's something that's going to be a decent barometer for you. When you're looking at the price of oil, it would suggest that would bring down some of the inflation. So natural gas and oil are the two sort of main charts to watch for what the ECB may do next. If natural gas and oil drop and continue to remain suppressed, then we can expect inflation in the Eurozone to also come down and drop. And if that happens, then we can start making sort of bets on the fact that the ECB will lower interest rates, and we can get on the sell side of the euro. But that's a bit early right now. So, but this is going to be an important number, the CPI data, and we'll have a look at a chart for the euro in a minute as well. We have got interest rate projections and the Federal Reserve rate decision as well on Wednesday. So that's obviously important. GDP. Okay, here we go. Back in with the New Zealand. So we're back with the pounds, New Zealand. GDP for the New Zealand dollar. Now, GDP has been suffering. It's currently in recession territory. Negative GDP. This is in recession territory. And we've had 2 quarters of negative growth. I don't know if you can see this that easily, so I'm going to just blow it up for you. Look at this, negative 1% in the 3rd quarter of last year, negative 0.2% of the 2nd quarter of last year. So this two consecutive quarters of negative growth is a recession. So New Zealand are officially in a recession. And the writing was on the wall. Look at that. The writing was on the wall back in 2024. So New Zealand is officially in recession. The last thing that New Zealand need is a situation where the trade wars and trade disputes blow up further. Last thing they need. This is a growth economy. It expresses growth in the globe. So we need to see this turn around. What's the likelihood of that? Pretty slim. But we need to watch the number. You never know. Watch out for that number. What else have we got? Average earnings. So the inflation from the UK. Average earnings excluding bonus. Now these have actually been just easing a little bit. So it's an inflation number right up until October 2024. They've been easing a little bit, but now they've picked up as well. But if you look at the kind of historical average, this is kind of normality where you sort of like see it around here in this 4% mark. It started to dip down a little bit when the economy wasn't doing so well. Then we had kind of COVID going on. But the 4% sort of area, around about 3.54% area, that's kind of normality. So when you're looking at this, then you can see that 6% is high. So the easing down and then the pickup is another reason that you'd really be looking at looking at pound long. You know, this is not good. There is some evidence that there could be some easing in the average earnings levels. By the way, because um, the labour market is just showing a little bit more slack. So this may well come down. So we'll see if this does come down. If it does, then we might see the pound weaken. So this is the stuff that we're watching this week. GDP from the New Zealand. If you've traded the Kiwi pound, GDP from New Zealand, trade balance from New Zealand, and average earnings from the UK, and then you get the unemployment rate. And you can see that this is what I was saying about the this is easing a little bit because the unemployment has started to pick up. So when unemployment picks up, that means that there are more workers potentially back into the options for companies, and that will ease down the average earnings a little bit because they won't need to pay the small amount. They won't need to offer the small amount of workers out there so much money to come and work for that particular company. So the unemployment rate does need to be, picking up a little bit, and we can see that trend happening. But here's the kind of historical data on that. And if we look back to what tends to happen, we are in a particularly low position here. You know, these are kind of expressed with recessions. The 2009, that was sort of coming in. Then we get the kind of COVID level swinging down, and it's just starting to pick up a little bit. So you'd really want to see the unemployment level around about 5.5% for the Bank of England to be able to really substantially move interest rates down. So the evidence just isn't there for a sell-off. We have got an interest rate decision from the Bank of England, and this is really kind of, they might lower interest rates, and what could happen? This could be a driver. You know, what we might see is the participants just taking some profit before that number is released, and dropping the number down a bit. But if what we've seen is we can use the interest rate decision as a potential catalyst for a trade long in the pound Kiwi. If what we see is a reduction in average earnings, suggesting some disinflation, that could drive the price down. Then we see an interest rate cut. Now, the reason that there could be an interest rate cut is 4.5% is still elevated. You know, we got a 3% CPI, but an interest rate cut would still leave, and they could just cut to 4.25%. I think quite comfortably. That still leaves the interest rate above inflation, which is not where they want to be. They want it in and around the inflation mark, or if anything, a little bit below, to kind of give the economy just some relief and just add some liquidity. So we could see an interest rate cut from the Bank of England to 4.25%. That drive the price of the pound Kiwi down, but only for a period. Because if what we've seen is inflation still at 3%, the market's going to be thinking they ain't going to be able to lower interest rates by that much. You know, we might see interest rates down to 3.75%, something like that. You know, if the inflation, the interest rate could come down a little bit more, but they're not going to be able to lower it that much. Same with the ECB argument as well. So try and use the data to get yourself a price. Is the point. You know, you're waiting for the data to be released, seeing if there is a sell-off, seeing if the market kind of gets a bit overconfident. Then when it gets into this area, we can go, great, well, now we've got the price we want. The interest rate announcement's been made. Will they be able to continue to cut? Well, not if inflation continues where it is. So I'm still a buyer of the pound, but now I've got my price. So we can use that. Now, the dollar. The dollar is going to be one of interest. Donald Trump wants to weaken the dollar. And we are starting to see some flows coming out of the dollar. You're welcome, Robert. So if we're looking at trades with the dollar, look what's happened to the dollar recently. You know, if you check out the Aussie dollar, just starting to see some a pickup down here. Oh, no problem. Okay, last Okay. I'm wrapping it up. We got to play a video from Orlando coming in. So that's got some room, a little bit of room to travel to the upside. So we'll just quickly run through the dollar. Now, what I really want to look at is dollar yen, because the yen is the interesting currency for bullish side. Now, the dollar yen has broken down, not a particularly attractive place to try and sell this, but you can see this continues to show. This is a monthly chart. This continues to show downside, and it's got a little bit more room on the monthly. So really, I'd be looking somewhere around here, just along this horizontal area, probably just to meet the high of this bar, maybe. Let's see what that looks like. That's okay, isn't it? Look at that. There's a little touch there, touch there. So I'd be looking at this as a possibility for dollar yen to come down to. Oh, that's a bit problematic. So there's not much room. There's not much room to come down, but I would anticipate it coming here. Now, whether we get a little bit of a boost higher first could happen. So ideally, a push into horizontal level there, push back into these highs around about 151 would be really attractive for a short. So again, when you're going through this stuff, try and make a decision on where you think things are going first, which is what you're doing with the fundamentals. Easiest way to break that down. Where's the inflation rate going? Where's the central bank going? Are they raising interest rates? Are they lowering interest rates? What's the trend? The trend from the BOJ is they're raising interest rates. Some inflation numbers from the United States are kind of suggesting the Fed could continue to cut. We might see that cut again. Then you can open up your chart and say, well, I want to go short on the pound, on the dollar yen. Have I got the price? Right now, no, we don't. Do I want to counter trend trade into the price? Possibly. Depends what sort of trader you are. Do I want to wait for, if not, then do I just want to wait for where I think that this could turn again to continue the trend? Because that's what all you're doing. You're trend trading, but you're going to continue the trend. But the trend would be better continued from this point rather than this point, because this is an extension. Extension, you want the retracement back into the area, then look for downside again. So I'll wrap it up there, guys. Just to kind of reiterate, dollar and the CAD would be my two shorts, and the Swissy and the yen would be my two long. But it doesn't necessarily mean the price is in yet. You might have to wait a little while, maybe a week. I don't know. Have a great week trading, guys, and I will see you next time. And we're going to have a little video coming in now from Orlando and talking about some of the gaps.